Hello there, my name is Gabriel. I am also known as the Finance Catalyst. I am a Christian, an entrepreneur, and the current host of the program on YouTube, ThinkTax, where we talk about financial matters. On today's episode of my podcast, I'm going to be talking to you about something very, very important. It's called the golden rules of investing. You might want to ask me, okay, what is investment all about? Why should I take investment so seriously? Investment actually forms one of the major bedrocks of the financial environment. For you personally, when you want to build wealth, you want to create wealth, it's always important to invest for the future, investing with the future in mind, and that's why on this episode of my podcast, I'm going to be sharing with you some of the golden rules that will help you and put you on track when it comes to the area of investment. Investment sometimes can seem very difficult at the beginning. When it comes to trying to understand why am I investing, what am I investing in. These are some of the questions that most people tend to ask themselves when it comes to the area of investment. So this episode, I'm going to be addressing some of these things. I'm going to be giving you about 7 golden rules that you can follow that could help you put you in the right direction when it comes to investment before you make any critical investment decision. These are some of the things you need to take into account. Now, the first thing I want to share with you now is starting early when it comes to investment. Investment is something that is critical that you start early. And one thing you must understand is the key. The key to building wealth is to start investing early. You want to create wealth. There are several investment opportunities in our financial environment today. So what you need to do is to try as much as possible to identify these investment opportunities. Make your research about this investment opportunity and start early. Start early. This is one of the most powerful ingredients when it comes to investing. Starting on time. You have to invest on time. The timing is always very important. And through this through the power of compound interest, you will see that your investments can grow and your money can actually be put to work. You can let your money create value for you. And it's really very, very important to take note of this. And also, you need to feel you need to understand that when it comes to investing, the best time to always invest is now. Is always now. There's a quote that says that the best time to plant a tree is 20 years ago. The second best time is now. So there's no best time as investing than now. So you need to be able to identify those investment opportunities and then take advantage of them. It's for your own good, because it helps you to generate value. It helps you to create wealth as well. That is the first thing. Start early. Number 2, you have to be consistent. Consistency is really key. You see so many people, they start something, but they don't have the passion. They don't have the drive. They don't have the what they require to remain at that particular task, or to be consistent at that particular task. But it's very important that when you are into investment, you have to be consistent. One of the most investment strategy is consistency. You want to put your money aside for your future every month and make it a habit. Don't wait until something comes up, or it's like when it's close to your time of your retirement, then you start thinking of I want to make an investment. No, the time to start is now, and you have to be consistent every month to put some source of funds aside and invest these funds into something that will generate value for you. Make it a habit. To make the process simple, just set up an automatic contribution every time you get paid, so you don't have to think about it. There are several forms of direct debits you can get from your bank account, where you know that these funds are going specifically to this particular investment. You must have made some research about that investment. You know about that investment, and you know how to go about it. And then what you have to do is try as much as possible to make it a habit. Making it a habit is something that will give you a sense of happiness, knowing that you have actually committed to this course. It's very, very important. So moving forward, I'm going to be talking to you about the third one, which is diversity. You might want to ask me what this means. It's more about diversifying your portfolio. So what I'm trying to say here, when it comes to investment, it comes with risk as well, and risk is something I will address in one of my episodes of the podcast. But diversifying your portfolio of assets is very, very important. Investing comes with inherent risk, but there are ways you can be very proactive to protect yourself. The key component is to diversify your investments. Don't just put all your eggs in one basket. That's one thing that is very, very important when it comes to. This is one of the biggest golden rules of investment. You don't put your eggs in one basket. You must have probably heard that saying. You don't put your eggs in one basket. The same is true for your investments. You don't have to just allocate all your investment into one particular asset portfolio. No, you want your asset allocation, or how much funds you have in each investment vehicle, such as maybe stocks, bonds, and cash, to create a very healthy mix for you, so you can get the gains you want. So you can get your gains and also lower your overall risk. So many people that they just don't want to take risks. So one of the golden rules of investing is to have a well and properly diversified portfolio. To do that, you want to have different kinds of investments. Different kinds of investments. You don't just put your eggs in one form of investment. Maybe someone talked to you about that, and you are like, oh, I really want to get into this particular investment. It might be maybe investing in a particular asset class, or it might be in a particular stock. Make your research. Try as much as possible not just to put all your funds in that particular investment. Try to see other forms of investment, and then try to diversify your portfolio. Because it's very, very important. Once you do that, it will help strengthen your overall portfolio and reduce your overall risk. In that way, you are not putting yourself in a high level of risk, because you've diversified your portfolio, and the risk in that regard is low. So that's one of the things to take note of when it comes to investing. Number 4 is rebalancing. You want to ask me what does rebalance mean? The markets are always changing. So the market trends are always changing. So the fact that the value of a particular asset is this much today might not be the same in 5 years' time. For example, if you take the real estate investment as an example, you see that the value of a property today might not be definitely the same in 5 years' time. So since the markets are actually changing, you are as the markets are changing, your investment has to change as well. You have to plan your investment in line with the market trends. You will be investing for many years, so it's important to do regular check-ins, to stay on top of your money. Always be aware, know exactly what your money is worth today. Sometimes your original asset allocation can get out of balance, so what you will need to do is to rebalance it. Rebalance it. For example, the stock market may swing in various directions effectively. When you look at the trade, you see sometimes it goes up, it comes down. The volatility can be high sometimes. The percentages of the can be high sometimes. But effectively shifting the percentage of your investment is what is important. You want to work towards maintaining the percentage of your stocks and your bonds, your shares, that that will help you. It will help you reach your goals. If you don't like to take action, with market fluctuation, you could have a lot more of one asset class than another. That's very important. It's a part of the rebalancing process, because it will help you to buy or sell certain investment in order to get back your desired asset allocation. It's very, very important. Very, very important to take note of this, because it will help you prevent your portfolio from becoming too aggressive. When the goal is to minimize the risk, your portfolio becomes a little bit less aggressive. You see, so it's something you need to take account of. Try to balance your portfolio with the market trends. That's what the rebalancing process is all about. Just try as much as possible to check, to be on top of the market, be on top of your money, take ownership of that. Be intentional about that. It will help you to understand your original asset mix, what's involved in your portfolio, and what's the value of your asset in your portfolio. So this is very key, when it comes to investing. And number 5, I'm going to be sharing with you, staying on course. Staying on course. There is one big truth to investing. The market will always be in flux. Don't let that scare you. Sometimes it can move up, down, and some people are already panicking. You shouldn't be worried about that at the beginning. Don't let that scare you. The fear can even lead you to selling your investment in time because of fear, rather than stay on course. So your ultimate goal is just to build wealth. So it's to keep your emotions out of the process. Try as much as possible to keep your emotions out of the process. Adopting a buy and hold strategy. When you buy it, you keep it. It's just like with cryptocurrency, because of the high volatility of the currency. Sometimes some people tend to panic and sell off, cash out immediately. But this process of staying on course could also help you, because once you buy those several portfolios of assets, you can adopt the buy and hold strategy, where you stay on course and don't touch your money until possibly retirement. It can help you ride out of the market regardless of what happens. So this is very, very important. Number 6, you have to change it up. You will likely be investing for decades, and your financial situation won't be same during that time. So anytime that there's a big life change, maybe like a marriage, you're married, you have kids, you're moving, or maybe there's a loss of your job, or income increase or decrease, all these changes, it's time for you to adapt to this investment situation. So it will be time for you to change it up and make sure that your investment reflects your new financial situation. You see what I mean? So on top of that, your risk tolerance shifts as well as you get closer to retirement age, because now you are not keeping an eye on your investment and changing it up as necessary to keep your money in good shape. So it's very, very important to take note of that as well. So my final point is actually check in with your advisors. Financial advisory is very, very important. So many people, they make so many wrong financial choices and wrong financial decisions without really asking for help. If you have a financial advisor or financial professional in your life, it's very, very important to check with them. Check in with them regularly about your investment plans. It's really, really important. Your financial advisor needs to know exactly what you plan, when it comes to investment, because he can help you, he can guide you and help you get where you need to go. Don't be afraid to reach out and check in, especially if you have questions or concerns. This is one thing that most people don't get to do. They tend to make these decisions by themselves, but that's why they are financial experts. They are financial advisors, because they know exactly what it involves. So they are ready to be there for you, to help you, to guide you and navigate your way towards making the right financial decisions. So these are some of the tips I'm sharing with you on this episode of the program. Like I said, on this podcast, I was talking about the 7 golden rules of investing. And I said the first one is to start early. The second one is to be consistent. The third one is to diversify your portfolio. The fourth one is to rebalance your portfolio. And the fifth one is to stay on course. 6 is to change it up, and the final point I gave you on this podcast was to check with your advisor on a regular basis. So I hope this particular episode was very beneficial to you. If you're not here listening to some of my other podcasts, I will kindly recommend that you go back to several of my podcasts. I've dealt extensively on several key topics, terms on the financial industry, now financial world, that is very, very important and beneficial to you. So until again I see you in my next episode, I want you to stay financially healthy, stay financially safe. Always know that your finance is very important and it's key to building wealth for yourself. So stay well, and I will see you again. Cheers.